Good morning, everyone, and welcome to the European crossover webinar. And you do see that those levels, those numbers just dropped here on the market services. Final PMI came in at 45.4. They're looking for 45. Composite 47. They started off with the Spanish services PMI. It came in about 45 minutes ago. Came in at 41.7, a little bit weaker. Italian came in a little bit stronger than expected, and French pretty much in line, and then German was a little bit weaker. If you take a look here on the euro dollar, you can see here a little bit weaker. We did get that. We had our bias chart supported 2010. The low was actually 2011, so pretty close. Like I said, I don't do all this fancy Dan analysis and the upside down or the reverse side and the percentage of this. Look, I just look at the levels and where they may go to. That is simply it. Nothing fantastic or anything great I'm doing. Although the last couple of days we've been, hitting the resistance and the the support pretty well. I think what was it 2073, and the day before the low was like 2069, and kind of held it, and then we eventually did break. And same thing here. We're looking for 2010. The low was 2011. So once again, I just look at the levels. That's why when you see my synopsis that I do, the Asian analysis, it's usually no more than a couple of sentences. I'm just not going to write a paragraph or something that's just technical, and we're doing it on short-term trading. Look at those levels for the next 24 hours. Looking ahead at the top of the next hour, we do have Italian consumer prices, and then also at the top of the hour, Eurozone HICP flash and producer prices, and then UK BBA mortgage rate at 6 a.m. Eastern. Of course, I'm in Central Time, so you push it 1 hour out. This mortgage stuff coming out of the U.S. usually doesn't mean hill of beans, so pay no attention to that one. Then we do get ADP. That'll be key. We get ADP at 8:15 Eastern. Once again, I'm in Central Time, so 7:15 to me. So we do get ADP and composite at 9:45 Eastern, and ISM non-manufacturing PMI at 10 a.m. Eastern. So there we go, along with the sub-indexes like employment, new orders, and prices paid. So pretty data-filled morning. Moving on now, we did see the indexes move to new highs. I was short and ended up covering and went long for a little bit to offset my loss. But yeah, we did go on and push higher in Asia, much higher than I thought. I was going to see if we could balance it through the post market, in the earnings when they were releasing Amazon, and we were kind of holding okay. But then we started ramping up in the Asian session, so I wanted to wait till today to see, but we were just pushing too high. It certainly looked like it may have wanted to go on and push to challenge the all-time highs. We'll go to that. We'll see where we just closed. This is key right here. I'd actually added a long and took a quick short, which was up in here, and you can see the significance on this 2-hour chart, 13,555, and you can see where they faded back. They actually dipped into the 40s quickly, and then they kind of recovered a little bit here. It doesn't look like it here, but this is significant. And you can see this. I always go with the closes right here. So you can see they got up there, and I thought, I wonder if they're going to try and pull back to 13,555. Sure enough, they did that. They dipped down to like 40 and change, and then they popped back up, and they just kind of meandered around here. I don't know if they'll try and make a go for that high on the open. Here's the SPOOs. I don't pay too much attention to SPOOs, but I thought I would throw that up there and really push this 2-hour chart here on the side, and that way left things open. Taking a look at Bitcoin, you can see here that we got back above that 34,800. We do have a little mini little gravestone doji right there, and then we paired back a bit, but we'll have to get going much higher to get things worked out. Looking at that Nasdaq overall, we saw that Sunday session, and it came close, but never did tag that 50-day moving average. And then we came back with pretty good vengeance on Monday. And then surprisingly, we added more to Tuesday. And I saw a few seasoned traders scratching their heads saying, they just can't make sense of this market. I shared one guy who posted, said he had a really tough time yesterday, and it wasn't to point somebody out. I'm just saying that even these markets are just, like acting like people are saying, like that gentleman was saying, it's a new frontier, meaning the way these markets are acting, they're not acting like the way they used to act. And case in point, I was describing that in the afternoon chat. I forgot who I was speaking to. And I was saying, I mean, last week we saw the markets make all-time highs, then completely turn around and fall all apart to end the week, then only to come back on Monday and swing back with a pretty solid rally, and then continue that on Tuesday. And some people did try and take the other side on Tuesday. I did have a short. I just said, you know what, I'm not going to try and dance around it. I'm going to see what happens. I thought they might have just, maybe they would go like on the earnings and then fade from there. And it kind of did that. We did see a lot of swinging back and forth on top of that earnings, real heavy volume. I think I said over a 7-minute period, we had over 50,000 contracts trade in a 7-minute period. But then again, they push right back up again. But I was noting that sometimes you'll see action when you get this erratic kind of price swings when you're close to a top. And maybe, and like I said, I'm not saying that we're the top. This is the top, but we are starting to see that. I think it is key. You want to keep an eye on this 13,555. We may try and do one more pop. That's what I'm thinking. Maybe they could try and shoot up above these highs. I don't know, but we've had a pretty good run, and this is pretty amazing. Fortunately, at least this kept me from getting short too early, which is when I saw this hammer, I said, uh-oh, I've seen that movie before, and certainly we saw more follow through. And then I was playing around with silver at the time on Monday, and so we saw even more follow through. And then as we started to run up higher, I said, okay, I'll take a short. Fortunately, I took it in a small position. I sure am glad. But I decided to go and ride out, thinking, well, we'll come back. Well, we just simply haven't come back. I think in time we will, because even when we get a move here, this fear sell-off, I think, had those with the big hands lay some off. Now, they may have added back, but, once again, I think eventually we'll have to come back down to find some more buyers. But how soon that's going to be, and these markets are pushing higher, maybe we try and push another high. But you can see here that on the 30-minute, it's held up really well with the exponential moving average and kept it going. We are starting to dip. You can see here the 13,539. So we're pairing back from this level. You can see right here. Same day VWAP is going to come in around 13,528. And what I've been doing is just using the 2-minute chart to go and chart. And it seems to really work well. It sounds crazy, but these seem to work very well if you either trade the 2 or the 5-minute. You can see this now continue to go in and break down here from that 13,555. So with that, I'll cover the news, and then we'll hurry up and get on to things. So bear with me. Seems like there's always some good trading that comes on right when I'm doing this webinar. Hang on. Well, we do have some news about silver. I really don't want to go over silver anymore. I think it's fruitless. The only reason it had a lot of pub was because they're kind of trying and challenge this market and so forth and so forth. And then, then they raised the margins. That pretty much knocked everybody out of the box. So I don't think that's news anymore. So we'll move on to Aussie dollar. Bear with me. Aussie dollar support on risk sentiment, New Zealand dollar higher following surprise jobs data. Aussie dollar traded slightly higher, recovering some of the previous day's losses against the greenback as improving risk sentiment support the currency despite moves by the central bank to buy more government bonds. A lot of this stuff just doesn't mean hella beans anymore. Really, seriously, I don't know why people even follow fundamental analysis. Just go with the levels. Really, honestly, it's the only thing that matters. And that's why I was seeing some traders saying these markets don't make sense. And you're right. But the only thing that's going to save you is just the technical levels. That's it. and the momentum, because it's all short-term momentum. The Aussie was trading 410s hard 76.10 in the afternoon. 76.08 is a level in the previous session. We've seen a good rebound risk sentiment after a strong rally in U.S. shares overnight, said Steve Dooley. RBA Governor Philip Lowe said in a speech on Wednesday the dollar had been a factor in the bank's decision to hold its cash rate at 10 basis points. It's clear bond purchases have helped to lower the interest rates, and they've meant the Australian dollar is lower than it otherwise would have been. If we were to cease the bond purchases, it's likely that there would be unwelcome upward pressure in the exchange rate. The Aussie has solid chart support at 7,600, and the Kiwi was trading 39 point, like 1/3% higher at 72.18 after the jobless drop projected unexpectedly to 4.9% from the 5.3%. So there we go there. And dollar near 2-month highs on relative strength of the U.S. recovery. Dollar traded near 2-month high. Like I said, all we did was we went just with the levels, and that pointed towards, as I said, on the euro to 2010. So they're going to always write and say, this is the reason why. All they do is they just make the stories match up to where the price went to. That's it. So I remember last week someone was saying, oh, we're going to see this massive dollar squeeze. There never was a massive dollar squeeze. So that didn't play out. The dollar traded near a 2-month high versus the euro on Wednesday as investors look for a widening disparity between the strength of the U.S. and Europe pandemic recoveries. The view was bolstered by the moves in Washington toward fast-tracking more stimulus spending that contrasted with concerns about euro lockdowns. The dollar was little changed at 20.43 per euro. However, the many analysts correlation to reassert themselves as the year progresses and for the dollar to decline as the global growth recovers amid mixed fiscal stimulus. The relative growth dynamics between Europe and the U.S. are favoring the dollar at the moment, but it remains to be seen if this can be a longer-lasting theme. The dollar also benefited from a massive bout of short covering. There's not been a massive bout of short covering. Maybe there's been a little bit in the Australian dollar, but there's not really been. Compared to the yen, the euro hasn't made that big of a change. It's been a nice run for terms of strength, but I think there's something of that move and some retracement, said Bart Wakabayashi. I think 550 is a nice target, but I don't see any real reasons right now that move would be extended any further. May see the dollar's rebound since early last month as a correlation or correction after its relentless decline last year. The bear case is facing a short-term test. Okay, enough of that. So let's just hurry up and go and move into the analysis. Once again, that information doesn't really provide anything of any significance except telling you what happened, like a recap of last night's sports scores. It doesn't give you any hint to where things are going to go forward. So let's just go on and move into the analysis. Okay, moving on to the euro. We'll go on the daily chart. The euro fell to the bias chart support on Tuesday. There was the bias chart support, and the low was 2011. The bias chart support was 2010. The pair later on the day, rallied or recovered to close at 2040. Resistance on Wednesday will be 2073 with support at 2008. So 2073. 2008. Run the cable. Okay, so cable paired back on Tuesday with the close of a medium-legged doji. You can see that right here. Resistance on Wednesday will be 37.23 with support at 35.75. This is a little bit lower just in case we do break, and that's where that support will come in right there. You see this close? 35.75. So they just go after technical targets, and that's how I just set up the analysis. Same thing with the levels above. So 35.75, 37.23 in case we do break lower. Obviously still bullish. And we'll move on to the Aussie dollar. The Aussie dollar slid on Tuesday, breaking below the 50-day moving average before recovering to close above 76. Resistance will be 76.60 with support of 75.70. On to the Kiwi. Kiwi finished the day positive above the prior 4 closing days. So this took out the prior 4 close. Look, 1, 2, 3, 4 right there. So we took out those 4 right there. Resistance remained 72.39 with support at 71.50, 71.51. So we did rally up to here, but it's a little bit higher to come in here to the 72.39 right there, that closing bar. We do have this level. They tagged it, but the resistance where you'd hit some buy stops would be that 72.39. 72.39, 71.51. Onto the dollar CAD. Okay, the dollar CAD gave back gains on Tuesday. Support on Wednesday would be 27.42 with resistance at 28.29. Yeah, 28.29. Okay. Onto the dollar peso. The dollar peso is wilted like the last rose of summer. Support on Wednesday will be 20.03 with resistance at 20.18. And we're trading in a very tight range. So 20.03, 20.18. Dollar yen. Dollar yen tested stops on Tuesday. Resistance remains the same, 513 with 457. Like for the last couple of days, we've had this 513, and the high yesterday, the day before was 503. Yesterday was 518. So it's 513. Once again, just going with the levels has worked out really well. It's going to still stay the same, 513. The only difference is that support's going to be 457. Putting it right back at 513. Onto the cash dollar index. So the dollar index tested the stops at 91.09. And you can see here that our bias chart resistance at the time was 91.09. But at the end of the day, could not sustain a close above that level to spark short covering, because we said the day before, that's what it needed to get above there to spark that short covering. Resistance remains 91.09, although we're above it, 91.09, we support it 90.69. So we move this up to 69. Now the key is, can they get a close above 91.09? That would spark some further short covering. So right now we're just going to keep it 91.09. There's no need to go in and change it. If they can hold above it, like you can see right here, how that 91.09 kept this market in check. We got above it, but we couldn't sustain it. So right back down the pole we slid, although we stayed pretty close. And today we're trying to see if we can make another move back up in here. Moving on to the cross rates. We're still pushing higher in the Kiwi yen, something else. So we had 75.42. This continues to push higher. We're getting a little bit of resistance because you can see here we would have taken out stops right above 75.57. We did goose them, but we're coming back here. We'll have to see how this closes. Resistance, we can take a look at the weekly if there's anything beyond that. That's a weekly level right there. We can pull this back a little bit. See that close? That's the best close, and that was 76.18. I don't think we're going to get there, but we can see if there's any wicks above here. Those come in at 75.96. So we adjust this to 75.96. Man on the support. It's going to be the wick right there, 75.12. Onto the euro, pound. This still remains a sick duck. 88.03, no changes. Going to keep it there at 88.03. Resistance going to stay the same. We're just trading a quiet market, so no changes here on the euro pound. Onto the euro odd. And we had 57.67 on the downside. The low yesterday was, well, not bad, 57.66. And on the upside, I don't see any reason to change it. So it'll be 58.87. If we can spark something right up here. And you can actually look at the close from that day. So we can go with the close, which is 58.74. So we'll lower it down just a bit. Next one is the Euro Kiwi. We did break lower here. We've even pushed it lower. We'll see what we have on a weekly. If there's anything below here, we'll go with this close right here. And that would be 66.69. On the upside, it's going to be this wick right there, 67.56. Onto the Aussie yen. This one's just stuck in the mud. It's not going anywhere. No changes here. We're not going anywhere. We're just stuck in the mud. Onto the guppy. Same here. We're just stuck in the mud. We're not doing anything here. It's even getting tighter here. Look how tight that range is. The range on this is 43.31 to 43.67. So it looks like it's 36 pips. And that's really pretty small for this. But we do see here we had a almost, not quite, the body's a little bit wide. You can say almost like a gravestone doji. This one's definitely a gravestone doji. And you can see right here. So that's key. No changes here. And with that, we'll just go into the sterling odd. On the upside, we had 80.36. No need to change that. That's going to stay the same. You can see right where we came with it, right there into that level. 80.36. And on the downside, we had 78.61. Yesterday's low was 78.61. Okay, not bad. We'll just keep it the same. There's no need to change it. So there we go. That's the bias chart for today. Just looking at levels for the next 24 hours out. Amira says to take a look at platinum. We can take a look at platinum. Bear with me. You can see here, we haven't even looked at platinum for a while. And all we did was we put a level from that close, and look where the market went to, right there. That's what I'm saying is these markets, they're not what they used to be. Sounds like crying away, but it's true. They don't act like they used to. They're just like momentum driven on steroids. It's just like who has control of the momentum. So the only thing you can base your stuff on is just technicals. I saw someone asking in the chat room about a bullish argument for crude oil. All you can do is trust the technicals. That's the only thing that's going to go in and save you, whether you're right or you're wrong, is those technicals. So we can see here, you can see we went right to that level that we had from 2 weeks ago or something like that, a week and a half ago. So that's where we went. We went to the level. We closed right there, but yesterday we gave it all back in what's called you can see right here, that's going to be a bearish cloud, because you can see it took out the top right here, and then we closed more than just about 3/4 of the way down, which would portend to a lower move. So if we look at it here on a daily, and platinum isn't as, as liquid. We'll take a look at a 2-hour chart and see if we can find anything on the way down. So right here would be key, which would be 1094. And on the upside would be right there, 1117. As long as it didn't get above 1117, right there. If you were playing the short side, you wouldn't want to see a 2-hour close above 1117. But it does look like potentially they can come down to this wick, maybe try and goose some stops, which is going to be 1091 on that wick itself. The close would be key, which would be the 1094. Didier says, can you please look at Ethereum and Bitcoin? Okay, we'll go to that. One moment. And you can see here how well that the Bitcoin, same thing, has reacted really well technically. You can see here, remember we had this drawn in from 2 weeks ago, and how well the market has reacted to that 34,800. We talked about it as it broke it and it came back up to it. Once we got above it, we took off like a skyrocket with the stuff from Elon Musk. Then we failed. Look what we came back to, 34,800. Came back to again 34,800. We rallied above it. Look, we're holding 3,400, and now we've popped up above it. But we do have a little minor gravestone doji here, and we've paired back, and look how we just went. I haven't even updated this chart in about, I don't even know, in over a week, I think. Could be wrong, but I think it's been a week. And look how they come back right to the levels. That's what I'm saying. So you use the bodies, and then sometimes you'll see me when I'm doing the bias chart. If I don't see a body there, I'll look with a potential wick. Just the same thing we talked about the cable over the last week and a half. We said there's a weekly wick at 37.96. Maybe that's where they'll go to. You see what I'm saying? So you can see here they went right to the body. Look at this. This body got 2 body closes right there. Look where the market, take a look at this. Look where the market falls back to, right to that body touch. Rallies all the way back up here. Rallies from what? Rallies nearly $3,500. Falls back. Where's it stop? Right at the body. You see? And we come back here. We go above the body, but we can't close above it. You can see here we close. That opens the door for us to move higher. Notice how we test this a little bit on the downside, and then we take off because we tested it, but we didn't close below it. And then we take off. Now we're coming back, and what do we come back to? The same level. That's what I'm saying is that's the way I just do the analysis. I just keep it simple. I'm not going to read a whole bunch of stuff on what happened in the. I do get bank research that's shared to me. I don't read any of it. Honestly, I can't even remember the last time I read bank research. It all doesn't matter anymore. I used to be so attuned with everything in the Eurozone. It really doesn't matter. These markets don't react to that stuff anymore. So you can see here what we play here. We'll take a look in Ethereum. I have to, let me see. Oh, there we are. Well, there we are. Okay, so we did break higher. We broke even higher on this 4-hour chart. Not 4-hour, but 2-hour chart. I used the 2-hour. And we're doing pretty well. I mean, we did get a couple little gravestone dojis, but the market's holding up well. The key thing here is, once again, I always go with the body closes. You see, because that's what I always tell people, that's put up or shut up time on the close. So you can see here, here's the body close right here. The market rallies to it and stops right down on the tracks. It's stuck here. It closed above after putting in a little bit of a dip on the downside, but it doesn't make it convincing. So we kind of hang here. We can't hang here. You're not getting any momentum. Finally, they give up the ship. And down the tubes we go. We rally back up, and where do we run out of gas? Same thing, the body. We come back down, we fall apart, and now we make another challenge. We finally, looks like we're going to repeat this same thing all over again. And then people are like, I'm getting short. But they put their stops above here. Sure enough, we take off, and we see that follow through. Right now, it looks pretty good, though. And this would be, they'd be defending it back to here. So I want to put it back to Bitcoin. There we go. And there we go. And that'll be it. Someone said a head and shoulders in Bitcoin or an inverse. Let's take a look here. Yeah, I accidentally erased the daily on it. I'm going to have to work on that later because I've kind of shifted the charts here. I try and keep the 2-hour here. You can see how key that 13,555 was, and you can see here we dipped down. That doesn't sound like a lot, like I said when I was coming on here, but heck, folks, that's 30 handles here. And this is what I'm just trading super short-term scalping. And that's what I'm saying. Here I was trying to hang on, thinking, okay, well, they would do this and do that. Everything's being driven by these short-term momentum trading. So that's all that matters. But take a look here in the Bitcoin. I don't really see an inverted head and shoulders here. I mean, not really. I don't see it, at least not on the 2-hour chart. And I don't have it up on the daily. So, but we're holding up. We came back down. We need to defend this area on a 2-hour close. But that's what we have for today. Thanks for joining us on the European Crossover webinar, and we'll see you in the chat room.